All right, today we have co-founder and CEO of PostBeyond, Ivan Tsarynny. And Ivan, thank you very much for joining us. Ivan and I have both participated in Lazaridis Scale-Up program. Over the last 6 months, we spent a lot of time talking. And I wanted to bring you in to share all of your wisdoms scaling PostBeyond. And today we'll be talking about product market fit and pivots. So maybe to start off, why don't you tell a little bit about yourself and what does PostBeyond do, and we'll go from there.
Yeah, thank you. Thank you for inviting. Thank you for having me, Vitaly. So quick story about us. We're PostBeyond. Actually, speaking of pivots, we're PostBeyond, and we're in the workforce communication space right now. And what we do is we help companies deliver marketing and sales materials to their employees, and so that they can either post it and share it on social networks, share it with customers or prospects, or use it for internal purposes. And over the last 4.5, actually technically 5 years, we've done quite a few interesting pivots. And like you mentioned earlier, that we did start as a search engine and ended up as a workforce communication platform. And we started, like I mentioned, 5 years ago, so in 2012. And that was a very interesting beginning. Actually, exactly this time, 5 years ago, myself and Vitaly, and there was another co-founder, technical co-founder. We got together. We wanted to put together a different way, a different experience, how people search internet and how they find results across web, blogs, social networks like Twitter and other networks, and present it in a different way or in a simplified way. And fairly quickly we learned that it's a great idea, but probably not an idea that can sustainably survive and help us flourish.
And so, what was that moment in time look like for you guys to sit down and decide, okay, we have to pivot, and how did that process of actually figuring out what is the next direction going to be for the company? What did that look like?
Yes, so I remember it very vividly. We've invested about 5 weeks into development of that kind of search engine experience from late May, and we launched it, released it in July. There was some uptake, there were some users, some searches, but it was not hitting, even what I noticed, it was not hitting the benchmarks and the growth trajectory that I wanted to see to justify investment into that idea, because one of the ways we wanted to make money as quickly as possible, basically, is through ads or through other revenue opportunities. Just traffic wasn't there. Then I thought, the thought I had in my head, what is expertise? How can we drive traffic? And between me and Vitaly, we were not B2C experts. So there was a thought process in my head. Okay, what resources would be required to make it popular, make it viral? And at the same time, I was really closely listening to Vitaly, even though he's not a sales or marketing or business expert. His honest, candid, direct feedback is really, really good to gauge where things or how things are going to go. And he was really skeptical about being able to scale it quickly to the numbers that we wanted to see. So that created doubt in my head that this is the right niche or this is the right idea to double down on. And then I actually remember even more vividly a coffee meeting with Carol Lehman. At that time, she is the CEO of Exonify now, but at that time she was right in between her previous acquisition and I guess starting Exonify or accelerating the Exonify. And then when we had that coffee, she heard my story and she replied with a question. She said, Ivan, I see so much roadkill out there. I would hate you to see you being one of them. And is there a way, can you think of a way how you can get to revenue and sales quick so you can help sustain yourself? So that question from Carol really made me think about the business model the product market fit, even though I was not really aware of product market fit, what it means at that point. But I was thinking about how can we start doing something that there is a large group of people care about, and if we help them, we will ultimately be able to come to a sustainable business model and hopefully profitable business model quickly. So that was these two events really triggered our thought process. Okay, we gotta move from what we're doing today. Let's find a different space, and then we began search for the new space.
I would imagine you've gone through a ton of maybe proof of concepts or market validation in some way where you've maybe talked to potential customers, or when did you know that whatever you guys are starting to build would be something that's going to continue growing?
Yeah, that was fun. That was really fun experience. As basically we were in the stage where we're thinking, you know what we're doing today, it's not what we should be keep on doing. Let's figure out what we're going to do next. And the process, we kind of went through a little bit of a divergent stage where, you know, how about that idea or that idea or that idea? And then Vitaly said, you know what, let's pick one idea. Can we pick just one idea? And but we agreed jointly to do one thing is, before writing a single line of code, let's have some proof and validation that there is some number of potential customers that already are agreeing or pre-agreeing in certain ways to actually pay money for it. So what I did is, I remember I picked up Toronto Board of Trade member directory book, and basically began cold calling, listing, going through the pages and cold calling, speaking to marketers, digital marketers, creative directors, anyone in marketing or advertising departments, and getting a lot of no's or get lost. But some people said, yes, that's a problem. And we began discussions about what is the problem. And the hypothesis, the idea at that point was, there's large workforce. Generally, workforces are, there's millions of people in the workforce. There are only very few people who, in 2012, figured out how to use social media and how to drive value from it. Let's call them like social media stars or social media ninjas. And how can we help the rest of the workforce be noticeably better at social media than they are today, but not having to invest so much learning and learning into figuring out how to use social media. So that was the hypothesis. And then actually I met with a couple of marketers here in Toronto. One of them was April Dunford, and she was advisor and the entrepreneur residence in Communitech at that time. We were in Communitech at that time. And she really liked the idea. She gave me a couple of pointers how to, what kind of companies to perhaps focus on, how to structure the validation process. And I began cold calling. I began talking about the problem. I began asking about if it's, what do they do today, if they're driving business through social already or not, and are they seeing as a revenue opportunity for them or not. And during that process, we came down to 12 companies loudly saying yes, they would buy it, and 3 companies agreed to interview and do something in writing about it. So it took about 2 months to get that list done, but at the same time, we kind of figured out how the messaging will work for that particular idea, and we also, on a way, acquired a few people, and they joined the team to help us accelerate.
And was the first customer one of those 12 companies?
Yes, actually all 3. Oh, yeah. So all 3 that said it in writing, they're still our, all 3 are still our customers.
Yeah, that's great.
I don't have the stats for the rest of the 12, but probably many of them are still the customers.
So why don't we dive on the deeper end?
Yeah.
So how do you define product market fit?
It's a really important topic, and there's obviously that Anderson Horowitz article and blog or post that everyone references to, and everyone really I like that too. The way let me tell you my personal perception about
that's,
it, my
that's all I care
personal
about.
opinion. So it's just one person's opinion, product market fit. And again, it's based on my personal experience and things I learned from a couple of people. Again, like I mentioned, April, and another product marketer I really admire and found got a lot of valuable advices from, Brian Hartland. And what I learned and how I see product market fit is, let's talk about, let me tell you a quick story and then I will go through the structure. Let's just imagine sales enablement. It's a hot space right now, and there's a lot of companies jumping into sales enablement market. Let's just look at it. So here's sales enablement for, let's say, for insurance companies. So here's entire insurance market globally. Then here's the insurance companies in North America. There's insurance companies, let's say, in Canada. There's a third layer on the top. Here's the insurance companies that sell personal products or commercial products. Then you segment on a market segment of, let's say, commercial products. And then further down, that segment of the market will experience typically common set of challenges, problems, and opportunities. And then what are those problems or challenges that they solve? And the way I was taught and kind of learned how to look at it is there are two types of problems or opportunities. One is solve a problem that they're already aware of, or create a solution that will help them capture a new opportunity. And then looking at those two angles helps determine what kind of problem that they're experiencing and what kind of challenge we can solve, like which box that they're having trouble with and which box can we put ourselves in, own that box or owns majority of that box of the market share, and then get to the stage where we can sell the same product to the same set of customers. So let's say let's imagine there are 50 insurance providers on the market. Let's sell all of them that particular message. Let's capture significant market share. And then that will tell us that once we're able to predictably sell the same offering, same messaging to the same set of customers, that is a validation to me that we have achieved the product market fit. And then the next stage is, let's figure out, do we want to keep selling the same to the same and add a geographical angle? For example, start selling to UK or US, or start with the US and expand to UK and Canada, or find a different industry that also has a very similar problem. Perhaps insurance, business, commercial products when they sell. Who else sells commercial products that have similar problems? Could be commercial banking, could be someone else, not in an insurance vertical, but on a similar vertical, and then start selling the same product to the new set of customers, but where the same messaging resonates.
Are there any quantitative metrics that you use to know if you do have a product market fit?
Yeah, actually, let me tell you the opposite. There is very qualitative metric that we came to understand that we actually don't have a product market fit, or we actually have, but we don't know what it is. At one point of time in a life cycle of our company, we, at a certain point, like when we reach approximately, like, let's say 70 enterprise customers, it's a really good base, good revenue. We've done a review of the portfolio and we noticed that we have customers from 18 different industries. And when I further analyzed them, some of them bought it for the exact core use case that we sell, and they use it for that reason. Some bought it for the same reason, but use it for a very different use case. And some bought it for a completely different use case, not something we actually are aware of, and using it for something else. So what does it tell me? What it told me in terms of metrics is we certainly are able to sell, or we were able to sell. We certainly had some kind of product market fit, but we didn't know particularly which niche do we own. And we did not, because of that, we didn't know how to scale it profitably and quickly across specific box. And the third one is we didn't know, are we actually disciplined enough to stay within the box until we own that box and move to the next box.
And so we had a very similar situation. Where we're faced with this rainbow-like pie chart, all types of companies, and we have to double down on one. I agree completely. Having diligence to just be focusing on one vertical is so tough. So when you guys were done with this exercise, how did you enforce people to stick within these boundaries, to continue working only to serve that specific group of customers?
That's actually a very, very important topic, because what I noticed is it's actually a painful process. Because once we identified that we're serving too many messages to too many markets, let's assume you want to serve one message to one market. In theory, it sounds great. In reality, it means that the entire pipeline that marketing had built, most of that pipeline has to be removed and flushed out because it's outside of the ideal customer profile. And second is people who have been trained and have been working on building the pipe from multiple industries. They already learned the messaging to deliver to different kind of industries, and now they need to stop doing it with something that they thought is working well and something they have been happy, and just keep doing the same to the same. It is what I found to be really tough exercise and tough on people, and it's not easy, definitely. So what we have done is we have done many things. To be honest, I don't know which one particularly worked the best. Some of the, however, with that said, compensation plans for marketing, SDR teams or ADR teams, needs to be aligned with the right behaviors, and the right behaviors need to be aligned with the goals that we want to see. So if you want to see, if this is the ideal customer profile, and our SDR team is compensated on producing the opportunities in that ideal customer profile, the exercise was to incentivize only and be very diligent on basically paying out only on what is an ICP. And what it meant is, unfortunately, at times in the transition period, actually not paying and having tough conversations about leads that are not an ICP, and here's an ICP, and aligning the compensation with the leads in the ideal customer profile. So that actually helped us put a little bit more discipline and become better at focusing on what we want to do. And the second one is aligning the company around one message to ensure that there's only one message in the company, and getting to the stage where anyone you speak with in a company, they will say exactly the same thing. So when you ask them, what do we do? What does company do? You'll start hearing the same answers.
So I want to take a step slightly back. So when selecting that customer segment, I would imagine you would look at things like retention by cohort or by customer segment, cost of customer acquisition, maybe lifetime value. Is there anything else you're looking at to try to quantify that?
Yes, definitely. So what I've done is a very thorough exercise. I've reviewed every single customer from day one, their life cycle journey from initial deal to up to churn, if there's a churn, to retention, how long they have been with us, lifetime value, and upsell. We have really good stories on upsell and growth, so where we land a smaller engagement, they see value, and they start growing the deployment and the program. And the result of that exercise was a couple of, just 2 or 3 2x2 charts where all the customers began plotting in a certain trend. And one way was to plot it is, for ourselves, it was internal, external, and core use case and non-core custom use cases, and marketing, or are we selling to profit centers or cost centers, and deal sizes and values, how these charts look. And we clearly saw trends. What kind of companies buy initial deal, they sign the deal, they deploy the program, and they start growing, they're happy, they're buying more from us. And these deals for us tend to be larger, most profitable. I know that our customers want us to have profitable deals because they want us to be in business and they want us to keep on growing the platform and deploying on the promise that we made. And as a result, they're driving value from it. At the same time, we notice customers that sign, they're happy, there's an uptick, and then we're noticing that they're not driving value. And that was really powerful and painful exercise to understand why it is that some customers don't drive value from the platform, from us, and why they're churning. And we wanted to know who is it that we can drive most value for, so we can focus only on them, so that when our sales rep, ultimately when a sales rep speaks with the customer, one of the most scalable sales process, they can say, we solve this problem, do you have this problem? And if they say yes, we will help them. If they say no, then who else has that problem? And so, sometimes we get introductions from prospects, even the ones that don't buy. But we need to nail that problem. So that was the exercise we went through. And that really opened our eyes on kind of customers that we are best fit for. And if we're best fit for them, that's one of the indicators for the product market fit for us. Mm-hmm.
So with product market fit, it's not just it's not a single event at which point you become yes. At which point you would have a product market fit. So at which point do you know when you should really heavy up on hiring, just scaling across the board? Is there anything that you would look for to know when you should really put the pedal to the metal, so to speak?
Yeah, it's wow, that's a big one. Why it's a big one? Because we've done it both very wrong way and
we did too.
The right way. Pedal to the metal. When there is, what I've noticed, there were cohorts of customers over the last 4 years or messaging that drives predictable pipe. So when we looked at the pipe week over week, pipe growth, that was one of the most predictable ways to see what will close in 6 months to 9 to 12 months from now. Because we're B2B and we sell B2B to the enterprise product, the enterprise set of customers. And we actually matured. We started with this SMB segment. We were selling to companies with between 50 and 250 employees. We went up market at 1,000 and up, and then 5,000 and up. And with that said, pedal to the metal is when there's a predictability on messaging, when we know what message works, resonates, and we can teach that message. And we can start seeing predictability in the pipe growth. And another way, at certain times in a company when we had under coverage in quota and over coverage in pipe, when there were too many leads or too many opportunities to be handled by sales reps, that is a much better problem to have than having pipe this big pipe being this big and quota coverage that big, and sales reps are stumbling there and having to prospect on their own. Mm-hmm. Where in an enterprise sales, and again from our experience, sales reps, their best fit for the sales reps is to help customers buy rather than help prospect. Mm-hmm. So I'd say probably pipe growth, mm-hmm. week over week, month over month is one of the leading indicators to see that when we can start hiring the reps mm-hmm. and do full throttle.
Yeah, it makes sense. I was reading an interview of Kabam's CEO about 4 pillars of pivot. So there's you can pivot on the product, customers, go-to-market strategy, and your business model. How I think too many companies or too many startups pivot way too quickly, way too many times. Is there kind of a rule of thumb on when you should pivot? Is it when you run out of money?
Or rule of thumb, yeah.
Is there like an easy framework for people to think about when they should consider, changing one of these 4 pillars?
Yeah. So let me kind of go through that list. It's yes, those are the right pillars, or I've seen these pillars myself. One of them, product pivot, we've done only one. We went from search engine to this to communication platform. Our platform today is very, very similar to the initial concept, with some extra features. Definitely, roadmap have been growing, and we were deploying new features, but essentially it's the same platform. We've pivoted many times. We've experimented countless times in pricing, anywhere from transactional sales model to free, to freemium, to credit card, to pro versions like $100 a month, to enterprise versions. So, and our price points went from 0 to $25 a month, to $100 a month, to $1,000 a month, and to $100,000 contracts and above, and anywhere in between. And what interestingly found is the bigger the price point was for us, the easier it was to have a better cash flow, and at certain months or quarters be cash flow positive. On business model, it's hard to say if pricing is a pivot for the business model, because they go pretty close to each other. On the go-to-market, that is probably the most pivoted area by us. Especially in the first couple of years, we've been pretty much pivoting on PowerPoint. Our PowerPoint presentations were the pivot, were the product. In many deals that I close, are actually not all of them, but many deals, I would close it, and then at the end it's like 6 months close, and at the end the buyer says, "Oh, Ivan, can we, after they sign the agreement, can we actually see the product, how it looks like?" And she would say, "Oh, I just realized I'd never seen it. Actually, can you show it to us?" And obviously, what it meant to us is that we've been able to sell and pivot on PowerPoint, on pure messaging, value propositions, problem solving, and what kind of value is expected to produce to the customer, which was in a way good validation in my eyes to say that we're not pitching a product, we're solving a problem. And so yeah, all the 4 pillars we definitely had touched.
So sounds like product pivot is the most painful one, and then go-to-market pivot is something that you can, in early stages, just execute as often as you wish, as long as you're trying to uncover that exact fit for the problem you're solving.
And it's time to value is really important in my mind. And time to value, by this I mean, how much time would it take? Here's the question: how much time would it take to create a minimal viable product that we can give to a customer into their hands? It can range from, in our experience with PostBeyond, Vitaly began programming in late November. We don't know the exact date, but we said, okay, let's call it December 1st. And we gave it to first paying customer on January the 7th. So it took us 5 weeks to get the product to the first customer. It was extremely buggy, barely worked, almost no features. And then it took us about a year to fix it, or make it what we want it to be. On the other hand, on go-to-market, in one day, I can do cold calls. I can call 200 people, have maybe a dozen or 2,000 conversations, and I will learn a lot about them, about the market, about the customers. The next day, I can send, probably 1,000 emails. It would be too much, especially in the beginning, but say 300 emails, 3 cohorts of 100 to set titles of specific professionals in, let's say, in business services and professional services, business services vertical, and professional companies with revenues between $50 and $100 million, or between $250 and $1 billion, that are located in the U.S. in specific states and headquartered there, and that sell professional services, either management consulting or, let's say, infrastructure consulting, and start prospecting and seeing if that message resonates with them. Yes, within probably 2 days, I will get 2-3% reply rate. So within a week, I can have I can expect to have probably 3 or 4 dozen of conversations and learn about the market quickly without, and all of that can, you can do it, or I can do it without writing a single line of code. So that's what I mean time to value.
Yeah.
And what is value? The value is to have the feedback from the market, from the customer, from potential customers, and what is the fastest way to get that feedback.
That's awesome.
Yeah.
So it sounds like for every startup, it's all a matter of how fast do you get to the product market fit before you burn all the cash and you become the roadkill.
Yeah.
So what can you suggest, or what kind of tips would you give to startup founders on how to get to product market faster?
Yeah.
Product market fit faster.
I can, so advice, I usually try to stay away from advices. I can only share the experience that I found that speaking with prospects in different industries, let me rephrase it, making assumptions, putting them on a board, and finding the ways, what's the quickest, fastest way to validate or invalidate this most risky assumptions. And just execute on that. Have those conversations, have face-to-face meetings. There are 2 kind of fundamentally different approaches. Either there is some kind of warm network where I could meet and speak with people that even I screwed up on those meetings, and by saying screwed up, it means that I did not really nail a really good problem for them that resonated, but they would still take next meeting with me. So let's call them friendly. And there are cold databases or cold groups of people I don't have warm relationship with. So and if I don't nail it on the first call, they would be very unlikely to have the second phone call with me or second meeting. So group these 2 and start learning from from my experience from the warm ones first, and then scale the learnings to the cold database, so to say, cold network. And for me, having those phone calls, having those meetings in fall of 2012 proved extremely valuable as I built up the language, built up the insights. What do they talk about? How do they talk? What terms do they use? What language do they use? What words? What's on top of their minds? What are the big things that are happening in their world that in the next 12 months that will impact their lives? And then learning these insights and then bringing it to the market. That was really valuable.
Yeah, that's awesome.
Yeah.
So we're going to be wrapping up, so I'm going to try this bonus questions on you. So you have 5 seconds to answer.
Wow.
3 questions.
Rapid fire.
Yeah, rapid fire. So what do you think would be the number 1 risk for any startup?
Number 1 risk for any startup, solving a problem or doing something that nobody cares about.
That's awesome. What do you think makes for a great CEO?
For a great CEO, domain expertise, sales and marketing skills, and people skills.
And when do you know your product is something special?
Special is when people I don't know about or I have never heard of, they want to use that product.
That's awesome. Yeah, yeah, I think I'm out of questions. I think this was really productive.
Yeah.
Thanks a lot.
Thank you, Vitaly. Yeah, my pleasure.